Hey everybody, this is Jim at SB500chart.com using time-honored techniques to understand modern markets, featuring daily technical analysis videos of the S&P 500 index. Just got to remind you again that the website and this video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And again, I'm still not a licensed financial professional. I'm just a guy who draws lines on charts. Okay, we are looking at a 10-minute chart of the S&P 500. And wow, the chart has been working extremely well. And I'll show you what happened today. If we back out on a 30-minute chart, you can see that we, for the past probably week and a half or so, have been following this line, this red line, which was the top of this triangle pattern, and this bottom line, which was a well established support line that also formed the bottom of that pattern. Now, I've mentioned this could also be a complex head and shoulders as well. It doesn't matter. The implications are exactly the same in this case. Not in all cases, but in this case. So, the technical theory that we are applying as we've been looking at the chart for the past week and change has been that descending resistance, which this line is, descending and resistance as shown by 1, 2, 3 solid touches. Once descending resistance is broken, it tends to become support. Conversely, ascending support, once it is broken, tends to become resistance. So you can see that once this ascending support line broke back in the middle of November, the market spent maybe a half a day barely over that line, but then sold back down pretty convincingly, as if to say this line is just too hard to get over. And so we saw that worked. And we are now seeing that descending resistance line, once that got once the S&P got back over the top of that line, it is now providing support. If we look at a 5-minute chart, kind of reorient things, you can see that that the S&P bounced at the what was it? That was the end of the trading day on the 8th. It bounced on that red line, and then today it bounced again. So that leaves us sort of near the bottom between this line and this line. But I think we still consider this line as support because it should be. However, I think we now have to look at this black line right here as being some mild resistance because it was some support back here. Now, in all honesty, the market kind of ignored this throughout the 8th and early on the 9th. So I don't know that this would be really strong resistance should we get up and test that area tomorrow. What I actually think would happen is that there would probably be some little bump there, but some turn back. But if the market continues to follow through with this late day rally that erased a fair portion of today's losses, then I would expect to find some more resistance, if not at this apex line, then probably in the 1254 to 1255 region, simply based upon the idea of gap resistance. And again, what is gap resistance? Well, gap resistance is when you get a gap down and those people who got trapped in trades up here in the mid to high 1250s, they may be chomping at the bit. If the market rallies back up to 1253, 1254, these people who bought back on the 9th may be willing to say, you know, this market's just a little bit too funky for me right now. I think I'm going to sell once I get up into that area that I bought. They may look at that as an opportunity to get out even. So that's why we get gap resistance. It's also why we get gap support, but for the opposite reason. For example, you can see here we had that gap up, and that created some support back here. So anyway, that's kind of, it's pretty basic today. The market ended almost exactly in the middle of where I would expect support and where I would expect the next resistance. So that means I can't really tell you anything about which way it goes tomorrow. And all I can tell you is we're between here and here. If we'd closed today with another little tag on this line, I could have said pretty confidently, look for an update tomorrow. But right now, we could come back down and test this again, or we could continue this strength and come up and make a try for the mid-1240s. And if that breaks, then make a try for the low 1250s. Again, I want to remind you, all of this volatility that we're seeing here is primarily being induced by news out of Europe. And since Europe is awake, 4, 5, 6 hours before we are, you know, there's changes that occur in the market outlook before our markets even open. So that's why we're getting all these gaps. That's what's making this a really tough market to actually hands-on trade, because unless you're a futures trader, you've got lots of gaps to deal with, and even the futures when they open at times like on Sunday, we've been getting some big gaps when the futures open back up on Sunday evening. But look, that's our video for today. I appreciate you watching this. And when you get a chance, hop on over to SB500chart.com. And if you're a subscriber, great. Please join our forum and add your voice to some of the intelligent posts that we have. We don't have a lot of posts. But if any of you have spent time on Yahoo message boards, you know that volume of posts is not necessarily a good thing. But we have some very well thought out rationale by just a handful of frequent posters that I think you could maybe gain a lot of insight from. So I would encourage you to check that out. If you are not a subscriber, I would encourage you to look into that and learn how to draw these lines and learn how to apply some of these charting rules. I think if you do it in a disciplined way, and if you're patient, and if you understand that nothing works 100% of the time, as a matter of fact, nothing works 80% of the time, then I think this kind of analysis is a valuable tool. And I hope you find these videos to be valuable to you as well as you formulate your strategies based upon your objectives and your financial situation. Thanks a lot for watching.